Welcome back to another episode of the Meet Kevin Show. This time we have the honor of not only having Kevin O'Leary on the channel now for the 5th time, but in person for the first time. Thank you so much for coming.
Great to be here, great to be here. You know, this is the outcome of the pandemic easing away. We can meet in person again. It's great.
It's so exciting. So thank you so much for being here. Obviously, Kevin O'Leary from Shark Tank and O'Shares. Kevin O'Leary also has a YouTube channel. So the first thing I want to talk about is, of course, this banking crisis.
Right.
We thought it was over. We saw that the banks were essentially de facto bailed out, Silicon Valley Bank, Signature, and the others. What's your take on a renewed banking crisis coming? First Republic, for example, or maybe I should say, and do you think all deposits should have been 100% backstopped in March?
So let's just keep the emotion out of it, because it's actually quite an emotional issue. This whole idea of regional banks supporting regional economies. Most of these franchises were set up more than 60, sometimes 100 years ago. By the numbers, there's about 54 regional bank brands. They have between 100 and 1,000 branches each. So you end up with around 4,500 branches. We're learning that not every branch is well managed, and that there's what I call the idiot factor. We don't know what percentage of them, but let's just use a number like 15% are run by idiots. And I don't mean that in a derogatory way. I mean, they've never experienced rate hikes this fast. When you think about the talent you required to run a bank, you only need to do 2 things right, okay? You need to understand duration and quality. So when you loan out money, how long did you loan it for, and what is the quality of the recipient's ability to pay it back? Or when you take depositors' money and you invest it in treasuries, how long, what duration are you putting it out at, knowing with certainty that's illiquid until it comes to maturity? In the case that rates go up, you have to sell it at a loss. Now, if you don't understand that in the context of being a banker, you're an idiot. That's my definition of idiot banker. So in the case of Silicon Valley Bank, run by idiots. The board, no oversight at all, it seems. And even the Fed seems to be culpable here because they didn't see it coming. So I think there's going to be a lot of soul searching within the system. But having said all that, let's ask ourselves a more important question. When you set up these banks decades and decades ago, it was done for a singular reason, because the banking system and the government at that time realized that there were regional differences in the economies. Texas's economy, very energy-based at the time, versus California, agrarian growing of all kinds of products and services. And then Florida was different than Illinois, was different than New York. So the regional bank stepped in to provide more local color and a touch point, particularly around the asset class of commercial real estate. Now, there was no internet banking. You rode your horse to the branch. That's what you did. That's when they were set up, and you had a bag of money and you brought it back to the ranch and all that stuff. Decades go by, and of course, we don't need regional banks in the same way anymore, because we have online banking, we have electronic banking, we have digital banking. You can make a loan or apply for a mortgage from an online entity that you'll never meet anybody.
Yeah,
and indeed, that's what people do. And so all of a sudden, you start to wonder, why do we need all this infrastructure when really other countries have already proven? England, for example, has 300 banks in total running the economy. Canada, 6. Handful of banks in Australia.
Wow.
2 banks, now 1 big one in Switzerland, with some smaller regionals in Zurich and Geneva. But they don't fail because they're well-managed banks. And there's some examples in the United States, like the state of North Dakota, that has its own banking charter that oversees the regional banks in North Dakota, and they don't fail. It's the idiot banks that cause the problem. So now you're wondering about, what's going on with First Republic. It's going to go to 0 because it's run by idiots, and that's okay. It doesn't matter if it goes to 0, as long as we don't guarantee every deposit past the 250,000.
Which we did for Silicon Valley
Well,
Bank.
we shouldn't do that again, because you're making someone in Florida pay for the mistakes of an idiot in California, and they're not going to put up with that. They don't have that interest. And so there's going to be a backlash, a pushback from people saying, wait a second, I don't want to guarantee the folly of idiot bankers. And so we have rules in place. The FDIC insurance, which is only just over 200 billion now. And when First Republic goes down, it'll probably eat up 40 billion of that.
Wow.
So you have to cull the idiots from the herd. And it's okay that all the shareholders at First Republic lose all their money, all the bondholders lose all their money, and I'll tell you why it's okay. The market will self-correct. They'll say, oh, where's my money?
Yeah.
Is it with an idiot banker? Maybe I should move my money away from an idiot banker to a less idiot banker. And the industry will consolidate to less idiot bankers in super regionals. Long answer to a complex question.
Thank you for that. So would you say that at First Republic, or even let's go back to Silicon Valley Bank, should shareholders have taken, or rather depositors taken, let's say, a 10% haircut if that was what was necessary to prevent FDIC from taking a loss for uninsured deposits, the numbers over 250K, like a Roku. Roku had somewhere around $400 million at Silicon Valley.
Circle had 3.2 billion.
Should they have all taken a 10% haircut?
Well, no, I think they should have taken the full haircut past 250,000.
Oh, wow.
Those are the rules.
Wow.
Why do we change it?
That's
because believe me, the economy would have survived, Roku would have survived, Circle would have survived, but it would have changed their behavior going forward. The market always does a very good job when it has these corrections, and I'll give you an example. Lehman Brothers, did it wipe out the American economy? No. Bear Stearns, just a blip. Enron, who cares? It didn't change the energy market.
That's a good point.
The idiots always get culled, and that's a good thing. But when all of a sudden I'm being asked to take care of everybody's problems all the time, and there's no culpability with the idiot manager, I'm not okay with that.
Now, how much can we put on a tinfoil hat here? At Silicon Valley Bank, one board member apparently was also at the San Francisco Federal Reserve. And then you've got Gavin Newsom, the governor of California, whom I ran against for governor, who's got his money at multiple of his, I think, wineries had deposits in excess of millions of dollars at Silicon Valley Bank. How much political influence do we think had to do with bailing out Silicon Valley Bank completely?
Well, the litigation and the investigations are going to go on for years and all kinds of, I'm sure class action suits or whatever. And that is how you clean it up. You shine the light of transparency.
After the fact.
After the fact. And these questions will be answered, and they should be. But for me, it's about sticking with the infrastructure as it is, because it's worked forever, and not changing the rules for just one set of idiots and changing them for another set of idiots. The idiots will be culled, and it's important to do that. And as a result, you end up with when you cull the herd, you end up with a stronger herd.
Sure.
If you don't cull the herd, you continue to have idiot bankers blowing up all the time.
Right. Well, because there's really no risk. You may as well try to expand your bank as recklessly as you can, because then you get those.
That is precisely the argument for why you don't change the rules, because you will not change behavior of idiot bankers. If I get a bank charter, I can go to Vegas, put all the depositors' money on black and take no risk.
Yeah.
Why wouldn't I do that? Why wouldn't I do that?
Exactly.
Oh, I lost all the money in Vegas. Bail me out. Like, that's not okay.
Yeah. You start over.
Right.
Yeah, that's the other thing. You had board members from Lehman Brothers on the board over at Silicon Valley Bank. They are all able to start over.
All of this will come, to the fore.
Very interesting.
The light of transparency.
Next question. The Ray Dalio argument is that we're at the end of a massive debt cycle, that there are going to be a lot of defaults, and that needs to happen to eradicate maybe some of that idiot herdness. What say you to this idea that we're going into a new monetary regime and we're going to see a lot more defaults than maybe we're prepared for in this economic cycle?
Well, I have a slightly different take on it, because the majority of risk right now in the infrastructure of both regional and money center banks is commercial real estate. So that is just one. We have 11 sectors in the economy. The 11th, the newest, is real estate. And a lot of
crypto for 12 soon?
Well, I still argue that could happen, but we can talk about crypto in a while. But let's just stick on this issue. The majority of debt that was done in very liquid times with very low rates starts to come due in Q3 and Q4 of 2024. So the defaults will start then, and then the peak of it, the refinancing in 2025 is going to be very high. So that's when all of a sudden the economics of a lot of commercial real estate don't make sense. It'll be upside down. And the equity holders in those real estate buildings they'll go to zero. But the great thing about commercial real estate, there's always an underlying bid.
Right.
So it's not a zero. It's just that the existing shareholders are going to get wiped out. That's okay because hopefully they diversified their portfolio. The one thing you get as a free lunch in investing is diversification. So you don't want to have all your assets in commercial real estate, maybe up to 20% maximum, but that culling will come. It'll be 24, 25. That's going to be painful because refinancing that debt that was done at 5 to 7 will be now 9 to 15.
Yeah. Oh, yeah.
And so I feel sorry for those people, but it's okay, but it's not going to change the fundamentals of the economy. It's just one sector under pressure. I'm very optimistic, actually, that the economy is structurally sound and, in fact, even more efficient, that it's come through the pandemic and been digitized.
Oh, interesting. So potentially it's already been through, this is insensitive, but one weeding, so to speak, has strengthened already. Now, by 2025, I think we're looking at $1.5 trillion of real estate loans that have to refinance. I think it's somewhere around $500 billion per year going up to there, with more of that skewed to them.
I know that sounds like a lot of money.
It does,
but it doesn't go to zero. It takes a 40 to 60% haircut. And that would be under extreme stress. More likely, maybe 25 to 35%, depending on the property. And there's a whole group of investors now forming funds, stress funds around this, to start to go. It's like
bottom feed.
Well, it's like a slug at the bottom of the ocean. The shark dies and the protein falls to the bottom, and it's repositioned. It gets consumed, and so the same thing's happening here. These sharks are emerging, and it'll take about 36 months to take all of those facilities and refinance them at higher rates and reestablish their cap rate.
Yeah, because we might even see rent compression on top of that. But what I think is interesting, what you're saying is, really it's we think of commercial real estate as losing so much value, but the debt is the protected portion. It's the equity that's getting wiped out first, and I think we forget that.
It used to be that you'd wipe out all the equity in commercial real estate every 7 years.
Oh.
Then it was every 12 years. Now it's going to be 25 years.
Oh my God.
It's been 25 years of low rates. And so I would argue that sector is going to be challenged for a long time to come. But it's been the longest cycle ever. There's been billions and billions made, and everybody should be pretty happy they've made money in real estate. I think there'll still be opportunities more in residential and recreational, but commercial real estate, it's not only that, the fundamental workforce is changing their behavior. And they don't want to live in, basement rat cubicles. I mean, so all those buildings that were built with, no windows in the basement and everybody sitting in rat holes, they're worthless. They have to reposition them.
Yeah, exactly. Now, what do you think if we see this multiple compression in commercial real estate? It sounds like you're optimistic about residential, but couldn't that carry over then? That if money moves from residential to now great deals in commercial, could that then equalize and also bring residential down?
Well, it's, I was looking at some residential data yesterday. It's fascinating. This is now about the competition of states' policy on taxes. Because we're talking residential. If you look at real estate in New York or California or, Wisconsin or Wyoming, Washington versus Texas and Florida and, West Virginia, states that have no state tax are enjoying extremely buoyant commercial real estate, not commercial, but residential. In fact, Florida is up another 6.7% in a time when rates went up that much. So it's sort of a situation where people are voting with their pocketbooks, leaving the Elizabeth Warrens and the AOCs and the punitive tax policy. And of course, all that tax base is leaving. I don't know what happens to New York. I mean, it's just, it's not investable. You can't put money to work here. It's the regulatory environment and the taxes are so uncompetitive.
So you wouldn't buy in New York?
Oh, never.
Oh.
I love New York. I love to visit. I'm happy to be here, but I would never invest a dime here.
Wow. Wow. That's incredible. Here it is. Right there. Okay. So inflation in the mid-70s peaked twice around the same time we had recessions. Our inflation in this cycle seems to have peaked around June of 2022, which was also where we technically had 2 quarters in a row of negative GDP. is the worst behind us?
I'm not sure about that. I think we have this rolling softness well, first of all, you have to answer this question. Next week, I think there's a 100% probability in my books that we'll get a 25 basis point rate hike.
Agreed. Yeah.
What happens after that is uncertain.
Yeah.
I think what happens is the Fed just stops, but it doesn't reduce. It just waits to see what happens.
Yeah.
Because when you look at how you calculate CPI, almost 30% of it is real estate, but it's from 18 months prior.
Yeah.
So we haven't seen the effect yet of what the rates have done to the prices. And so I'd argue that our real inflation right now is probably 4.5%, not 6.
Oh, wow. Lower because of that lag.
And I think the Fed kind of knows that, and I think that reflected in their comments. But then what happens after that is an unknown, because I think the economy is more productive than it was in the 70s or 80s because of digitization and a lot of technology we have today that we didn't have then. I'm kind of optimistic that we're going to get sort of 6 to 8% growth rates on equities, even after all these rate hikes.
My goodness.
So,
going forward.
Yeah. So I'm not in the camp that says massive recession, because there's another $1 trillion of stimulus that hasn't even been printed yet to put back into the economy. I mean, we have spent too much.
Oh, yeah.
There's no question about that. But having said that, these programs are already law and they're in place.
Is that Inflation Reduction Act money?
Yeah, the inflation. I think that's so funny.
Yeah.
I love the names of these bills. Yeah. There's no act of anything the government does that isn't inflationary, because they're printing money.
Of course. Yeah.
And so it's laughable, but we all understand the joke.
Well, Goldman did a great piece on it. They mentioned that the Inflation Reduction Act was supposed to create $389 billion of new spending, I think it was. But Goldman says that's going to be $1.2 trillion because they're interpreting all of the rules so loosely. They're going to be rolling the money printer.
Yeah, no, it does look that way.
Yeah.
So, I don't know who's going to pay the piper on this one day, but even this debt ceiling thing, we keep kicking the can down the road. And one day that will be unhealthy, but given that all commodities are denominated by US dollars, everybody wants to put their money here.
Yeah.
That's what happens.
So I want to ask you about the dollar in a moment, but I want to ask you also about this. It's another thesis, and I want to see your opinion on this. We had very little inflation between 2000 and 2019. The money supply was slowly expanding. And it wasn't really until COVID where the acceleration of the money supply printing ramped up.
Yeah.
Is that potentially what causes inflation? That is, can we go back to printing money at a normal rate and have virtually no inflation, maybe because of disinflationary forces like technology? And it's not unless we really ramp up the spend that we see inflation. Is that possible, or is that...
Well, the binary definition of inflation is too much liquidity chasing a limited amount of goods and services. And certainly that was the case during COVID, because it was an unprecedented situation. We've never had anything like that. Yeah. I think the government did the right thing in just providing liquidity to keep W-2 employees employed. That's basically what the programs were, PPP, and we'll talk later about the Employment Retention Credit, which is now coming to light as another program that's going into the economy. But it's sort of, given that there's so much liquidity still, I don't think inflation is going to be easy to tame. And the new normal of inflation may not be 2.5%. It may be more like 3.5%. Particularly when you look at what's happening with energy and food and proteins and things that are stubbornly resisting any kind of a decline in inflationary pressure.
That's interesting. Yeah.
Eggs are a great example. I mean, you're really paying a lot more for those than you used to.
Compared to 2019, without a doubt. I mean, I think it was Nestle that just reported they raised their prices somewhere around 10%. And they were essentially bragging about how they were able to raise prices. Now, I actually tweeted Kathy Wood about that. She was talking about disinflationary forces over at 3M. And she suggested that, but volumes are going down and soon generics will take over and we'll get the disinflation even in those sort of food areas, the Nespressos, Kit Kats, chocolates, and that. Do you think that's not likely to happen then?
I don't agree with that.
Okay.
No. I mean, I've been looking at the off-brand markets forever. It's, in my career, I used to, it was a marketing, my first summer job ever was with Nabisco Brands in pet food.
Yeah, pet food, that's another
really
one.
good lesson in brand versus off-brand. Generic brands will always be up to 30% of the market, but they never seem to get past that.
Oh, interesting.
Yeah.
Oh, so that's something that
They've been around for 40 years. So the idea that all of a sudden everybody goes generic, I mean, that's just not going to happen because there's brands, when young adults grow up, there's an emotional tie to brands they grew up with as children.
Oh, wow.
And so it's a very powerful force. So if you loved Kit Kat when you were growing up, you still buy Kit Kat when you're an adult. And no off-brand version of Kit Kat will ever replace your childhood memories. That's how brands work.
Wow. Same
And
for pet food, you think, then?
definitely, if you fed your cat, you know, whatever it was.
Purina or whatever.
The one area about pet food that has healthy pet foods as a category is the fastest growing. All of a sudden, people care about salt and sugar and you know, carbs for cats.
Yeah,
and
yeah.
But that category is a very high premium brand,
Oh, yeah.
and of course is growing. So that's because of the pandemic, people really fell in love with their pets.
That's fascinating. Okay, so no on that disinflation, and we'll hang out higher for longer, essentially. Then. How
Yeah,
long-
I think, you know, the numbers are the numbers. You
Yeah.
get to read this data, you know, multiple times each year, and data sets should be looked at in sets of 3. So if you get a spike in one data set, it means nothing.
Ah,
It's my
interesting.
old statistician training coming out.
Ah.
You've got to see at least 3 in a row.
So if I'm worried about the preliminary read of University of Michigan inflation numbers ticking up, that's just one. I need 2 more to
you
really
need
worry
2
about
more.
it.
You need, to set a trend, you need 2 more. And that's why you really can't call it inflation yet. We had 2 quarters, not quite enough.
Got it. Now, okay, how long then until we see the first rate cut?
So that's a great question. In fact, that is the question.
Yes, it is.
It's more important than discussing whether or not they'll raise rates next week. They will.
Right.
Then you're going to have this narrative that is going to be incredibly difficult to divine. Because if you knew that they were going to, in Q3 of Q4 of this year, do the first 25 or 50, you want to be long equities for that.
Yeah. Yeah.
And, you know, you're going to find a very interesting narrative. It's going to be no one knows, and anybody that says they know, don't know. Anybody that tries to charge you for a service that will tell you, that's worthless information.
Agreed.
You just don't know. And so accordingly, you need diversification in your portfolio, including a good hunk of cash to be opportunistic in case all of these assumptions are wrong.
Ah, how much cash would you say percentage-wise?
Well-
I know your rule, your original rule.
Yeah, but I find myself in a very interesting situation. We just did a mark-to-market last week because there was so much turbulence in our private portfolio, and we sold some companies, and we moved a bunch of money out of regional banks, and we're rolling T-bills now.
If I remember, you got rid of your commercial real estate a while ago.
Yes, I did.
Yeah, the last interview, which was
Yeah.
about a year ago. Look at
Yeah,
you.
no, I
Good
did.
job.
I did. I not all at a profit, but
Yeah,
enough
that's
to
okay.
get out of that sector.
Get out.
I still have some that is, you know, it's locked in. I can't do anything about
Sure.
it. But I'm thankful for that.
Mm-hmm.
But I'm sitting on about 30% cash.
Oh,
right
wow.
now.
Yeah, okay.
And you know, I'm rolling it in 90-day T-bills.
Oh, yeah.
So it's
great.
sort of waiting out what happens next. And I want to be opportunistic because there's so much illiquidity in the private markets right now. I get a call every week, XYZ company, 100 million in sales. I have a 17.5% position in equity. I've been in it for 5 years. We were supposed to go public last year. I'm willing to sell it at a 20% discount for the last round. I love these calls.
Yeah.
I just got one on the weekend. And I listen to the call and I send the deck over to my guys and we look at it. I'll bid that 80% discount, 85%
Sure, why not?
Because-
You're playing Warren Buffett.
because I'm buying illiquidity.
Yeah, absolutely.
And so I'm going to, you know, and the fact that you would call me tells me you've called everybody else and you've tried to
but
do
you're
it.
Mr. Wonderful.
Well, Mr. Wonderful, you know, likes royalties, as people know. I like my capital back, but when I get that call and it's always, they're so optimistic about great value this is, and I'll get that deal for 85, you know, 15 cents on the dollar.
Good for you.
Or I won't take it because I don't
sure.
care. But once I bought it, it's my problem.
You shark.
You know, but I'm just very transparent about it because if you really want liquidity, you are going to pay a lot
Yeah.
for that, a lot, because I do not want to be locked in. It's got to be 100 deals. 100 have come in just the last 90 days.
Oh my Lord.
Yeah, it's crazy.
Would you say you could potentially align economic turmoil with how many phone calls you get?
I would say that, but most of them have been worthless opportunities because they're based on companies that have no revenue or they have no
Net
free
earnings,
cash flow.
yeah.
It's always, you remember the hype just before? All the crazy stuff.
The unicorns.
The unicorns, all that stuff. Well, you might have paid, you might have bought into a unicorn at a $5 billion valuation when it had no revenue.
Yeah.
And now you're calling me up saying, well, look, I'm willing to do it at a $4 billion valuation.
Yeah.
How about it's worthless? And, I have no idea what it's worth, and I'll give you $100,000 for your position. And if you can do better, take it.
Yeah.
Because then I'm going to own the lack of liquidity. There's so many portfolio positions like that.
Well, your take on de-dollarization. Obviously, we've lost some clout in the Middle East. Partnerships between Iran and now Saudi Arabia would have never been thought of before. Negotiated by China. There's so much talk about the dollar fading away, petrodollars going away.
First time I heard this narrative was in 1977. It was the first time discussion about other countries' currencies replacing the US dollar. And I've always found that interesting because no other currency is actually used to denominate all the commodities of the earth. So I don't care if it's platinum or pig iron or titanium or oil or gas. When you quote a price in India, Shanghai, Zurich, Geneva, Paris, London, there's only one currency, the US dollar. And you have to change that narrative that's been around for 100 years. And then there's the question, how much of your money, let's say you're an individual, or how much of an institution's money or a sovereign wealth fund would you put into the Chinese yuan? Well, my answer is zero, because it's not that I don't trust the Chinese people, I don't trust their government. And so I don't care what form of transaction you want to do with me in Asia, I will not take Chinese yuan.
Will you visit China?
Absolutely.
Okay.
I'll visit China, and
you're not worried about you saying that and then them coming to find you?
Well, no, because I'm sure they appreciate the truth. if you ask any institution how much of your portfolio is in Chinese yuan, it's always zero. And so that's why they want to be able to trade their equities on the New York Stock Exchange, and I'm okay with that. They have another 20 months to get on side with our accounting rules, or they're going to get delisted. We've already given them one extension and then another. Now it's time to comply. And the only reason I say this, I think the Chinese would appreciate to be put on a level playing field with the US economy. And so it's very imbalanced right now. We need to allow litigation in China to chase our IP there. We allow litigation here, they can chase their IP. We need to set the rules of engagement so that both sides have an equal playing field on this. And until that happens, we should be very punitive, because we are in a competition. They're a great nation, they're great people, they make great products, and they're very advanced in some sectors, but they are still not the American economy.
That's interesting.
So I don't treat them that way yet, and I would never invest in their currency, nor would anybody else, unless you're forced by the government to own it.
To do so. Now that's fascinating, because I thought you were going to go in the direction of saying less sanctions, but it sounds like you're saying maybe be punitive until we get our litigation rights in China.
Well, I don't want to go to war with China. That's a waste for both sides. I want to...
Trade war, real war, both.
No, I don't want any real war. I don't want any loss of life. What I want, the idea that they'll invade Taiwan is ludicrous. That would just do so much damage for them on the global front. I think in the next 2 years, you're going to see how bad it gets in Russia. I mean, sanctions can work over time. You probably can't even fix your washing machine in Moscow right now.
There's a lot of talk, though, that people are just importing those through Kazakhstan or Turkey at higher prices, but just to circumvent our sanctions.
No, they are, and there is a call it rough trade, whatever you want, but it's not enough volume to support the entire country. So you have the haves and the have-nots. It's a horrific situation, a lot of suffering going on. Young people being, prisoners being forced to go to the front. There was that horrible story in the Wall Street Journal last week. It's getting pretty rough over there.
You said 2 years.
Yeah, but I'm talking 2 years from now.
Yeah.
And what generally happens to dictators or leaders like Putin?
Hey, I could really use your help. I have a sponsorship I'm about to play from the Financial Times. Please check them out. They're a fantastic company, and I really do get a lot of fantastic content from the Financial Times. So check out this clip and then back to the interview. Many of you like to know, where does Kevin read his news? And I personally love the Financial Times. I get the paper edition of the Financial Times. I read them online and on my iPad, but not only that, check this out. This is the Financial Times FT Edit app, and they have paid to promote this app in my video today. So thank you to the award-winning journalists at the Financial Times and the team at the Financial Times. I think this app is a phenomenal product. You can get 30 days totally for free by using the link down below. And here's how it works. They basically give you 8 of the day's top stories, and they sort them by date. So if I want to know about Tesla's resale values on Tuesday, March 28th, I can do that, and the story stays there, which is great, because one of the reasons I like the paper is because the stories don't change on that day. Whereas on the regular website, it feels like the stories are always changing and I'm missing stuff, right? The cool thing though is, let's say I missed yesterday's Financial Times edit. Watch this. I could just go to Monday, March 27th, boom, click on the 27th, and what happens? I could read about big tech facing a reckoning over a teen health crisis, or who's this Alvin Bragg guy? Or maybe I want to learn about Jay and Janet and how even though Jerome Powell is supposed to be politically independent from politics and the Biden administration, he has to align with Janet Yellen via pressure, but she has to align with Joe Biden. Now, that's just an example of information that I learned directly from the FT Edit app, that even though Jerome Powell is supposed to be independent, he has to politically align with the political party that's in control to send the same message on financial stability. So, in my opinion, the FT Edit app is a fantastic way to simplify the way that you get news, and if you don't have enough time to read all the stories, just bookmark the story. So, click the link in the description, link down below, receive a 30-day trial via the Apple App Store, iOS, and iPad. Terms and conditions apply.
It works for a while until he gets a hunting accident.
Right, yes.
I mean, that's sort of, and everybody thanks him for his service. Yeah. Or if you look at what they've done to previous leaders that have caused so much harmship to the constituents that support them, they get a dash out and they live out their lives basically in a nice prison.
Right.
And one of those two outcomes is going to happen to him. He's a war criminal now, so he can't really buy anything anywhere else. He may end up in The Hague one day. I don't know. Yeah. There's too many images documented. This is a war.
You think they'd send him out to the ICC from Russia?
He could end up there, but certainly some of his generals will.
Wow.
This is the challenge, is there's so much digital documentation of these horrors, and there's so much technology to actually track how it happened, that, you know, in 10 years, when these aging generals are sitting in their 70s, sitting on trial, you only have to kill one baby, and you're in prison for the rest of your life. They're killing one every minute. So, you know, it's sort of, if that is the right outcome for those guys, because it helps the next generation understand there's a cost to this.
Right, right. I mean, you still see today surviving Nazi war criminals being tried in Germany.
Oh, it never ends. Yeah. I mean, the long tail of justice never stops.
That's a good answer. Money supply is contracting.
Yeah.
Would that be deflationary against the thesis that maybe inflation will stay higher for longer?
It's a great point, but you have to add productivity into the equation. You know, people that say we're going into a deflationary cycle are not taking into account the tremendous productivity of the American economy, which hasn't yet been measured on a post-pandemic basis. And so you know, these questions of economics they should be debated, and everybody should understand what's being debated. But I see in my own portfolio of private companies incredible productivity, incredible abilities to pivot and change distribution channels and change cost structures and change communications and outsource, even domestically outsourcing costs they never could before. It's remarkable to watch this happen and how fast that it happens. And so it's very hard to get me in the camp that says we're going to go into a deflationary cycle. I personally think inflation is somewhere between 4.5 and maybe 5%, not 6.1, because of real estate hasn't been marked to market yet. I think it's going to be very gut wrenching in Q4 of 2024 to Q3 of 2025 on commercial real estate. Maybe $500 billion's lost there. You want to cull your commercial real estate portfolio.
Wow. You were just talking about pivoting. On this channel, we like talking a lot about flip-flopping. Is it very important for businesses and business owners to change their mind and go towards more profitable things when those productive elements are available, like you described?
It's a requirement for success. I mean, that's how I size up my CEOs now and their management teams. What's your ability to pivot?
Wow.
Because think of the challenge that the American economy had in the second quarter of 2020 when all distribution channels shut down with no vaccine, yet people sitting in their condos needed food, needed goods, needed services. And all of these companies, even at a time when Amazon, the biggest direct online distribution channel, shut down for essential goods only.
Yeah.
So if you had anything else like hairspray or detergent or baby diapers or grocery shopping technology or whatever it was, and you were a grandmother that never used your cell phone, well, if you didn't learn how to use your cell phone, you starved to death. So
wow.
And they did, so all of a sudden a whole generation, a third more of the population became digitally savvy, and they've retained that knowledge. So in my building in Miami Beach, which is right on the beach, we have a lot of retirees that never used cell phones. Today we had to do a huge build out. The number of packages has increased 2,000%. We have 4 loads a day of at least 200 packages. So we have an onslaught of a direct-to-consumer business, and I'm just one building.
Yeah.
The building beside us, same thing. And so the entire economy of South Beach has changed. And so it's just an on-demand situation, and that's because the people that live there learned how to go digital.
Wow. Now, I think this is so fascinating, this idea of a post-COVID economy really hasn't been measured yet. Do you think that will help us completely avoid a recession?
It might, or it may extend a softer recession. 7-8 months ago, when the first narrative came through saying, can Powell engineer a soft landing? I was one of the voices that said never. You cannot engineer a soft landing. It's not possible. You always have to extend into recession, then pull back. Sometimes the market oversees it and says, okay, I'm willing to invest for the other side of the recession. In this case now, I'm not so sure. Of course, everybody hates him. Everybody hates every Fed, okay? Everybody hates every chair. Everybody hates them in every jurisdiction all of the time. In every administration, you always want to beat up the Fed since the beginning of time. But they know that. And so they sit right in the middle of the track and they do what they're going to do anyways. And they just take the slings and arrows and they're called to the hill and they get grilled like a piece of chicken in there. It's over and over and over again. But Powell's done a hell of a good job. He's a very good chair. He's been masterful at using new technology to communicate what he wants to do well ahead of the old leak ways.
Sure.
In the old days, they'd leak a letter or something. Now they just leak it digitally. I think we're going to have a period of softness for maybe 18 months.
18 months?
Yeah, it could be that long, and it probably will be triggered by this, call it a pig in the python of commercial real estate. It's got to go through the pig.
Interesting.
It's a really big $500 billion loss, has to be absorbed. It'll wipe out 15% of the regional banks. Cull us all.
A lot more bank failures.
Oh yeah, but it's not that bad. It's,
Don't mind, it's not that bad. Bankruptcies.
Everybody keeps saying, oh my goodness, the Bank of Zortmaster is going to go to zero. Who cares? The American economy is so large.
The locals do.
Yes, but it changes your behavior to be a better investor later. You will never put your money into a bank run by an idiot. And so you're naturally going to say, well, maybe I won't put all my money into that bank. I'm going to put some of it into a money center bank, some of it into, and I'll make sure it's 250,000 or less. That's okay. But yes, many banks will be consolidated, and this is very healthy. This is very healthy. First to go will be First Republic, could be as early as next week. That's going to zero for sure.
Wow.
Or a version of zero where somebody bails it out and the equity is worthless.
Sure.
Yeah. And the bonds are worthless. And that's okay. I've said it the fifth time. Cull the idiots. It's good.
Very well. Artificial intelligence, big deal right now. Obviously, there's a lot of hope. Who knows if it's just a fad? I want to ask you about that. But specifically, is it possible, because earlier you talked about the debt ceiling, is it possible that our economy grows so rapidly through artificial intelligence that the $30 trillion or $31 trillion that we're in debt now won't matter anymore because our economy will grow so much larger thanks to artificial intelligence?
That's a very optimistic point of view, and there are people that believe that. I'm not one of them. I think we are in right now a AI bubble.
Oh, wow.
And so I talk to many money managers every day, and they are trying to figure out, how do I invest in this? And the reason Microsoft is having such a good time in the last 90 days is it's the go-to for active managers to take a position in Microsoft as your play on AI.
Yeah, exactly. Yeah.
And so now the bigger challenge is monetizing AI. It's not clear to me how that's going to work out. I listened to the McDonald's call. It was very interesting because they're a behemoth globally. They disclosed on this last quarter that now 40% of their transactions are done in one way or another digitally all around the world. And they're looking at AI to try and augment size of order. So if you're talking to a bot and they're listening to your order, they know what you ordered last time, they remember what you tried. So maybe they suggest you tried the new fries last time, would you like to try them again? Can you give me some feedback on how you like those fries? And that kind of narrative, which can be done with these stacks of AI, may enhance earnings by just selling more fries. But that's not a watershed event. And so, you know, I talk to engineers that are coding, they're using AI to write lines of code, then modifying them slightly themselves. Writers are doing the same. But it's not clear to me that it's a quantum 30-40% enhancement in productivity. And I think that kind of optimism is premature.
Maybe 10%, marginally.
Or maybe even less, because remember, everybody's going to have the same tool. So is it really the internet all over again? Nah, it's a feature. Because at the end of the day, you know, I hate to squash the optimism, but think of the narrative over the last 36 months. You started with the crypto craze, 2001. And every investor needed to have a position in crypto one way or another, even before it was regulated and before, you know, the heavy hand came down from Gensler and everybody else. And then all of a sudden, for a very brief period of time, about 10 months, was the metaverse.
Yeah.
And I saw 100 metaverse deals, all kinds of crazy real estate in the metaverse. Give me $1 million and you'll own your own store. O'Leary Fine Wines on this metaverse. And I thought that was just wonderful. It was just so humorous. And then as soon as, you know, as soon as Facebook and Zuckerberg realized, well, this isn't working, my stock's lost 78% of its value, I think I'll start whacking some guys here and stop talking about the metaverse. His stock went up 80%. And now the narrative is AI. So you've gone through 3 cycles of, oh, AI is the hot thing. Watch what happens in the next 12 to 18 months. These valuations, because I guarantee you as soon as the IPO window opens up, there'll be 50 deals with the word AI in the title.
Oh, everything.
And it's all going to be no revenue deals, but they'll burn out pretty quickly. There's not a lot of appetite to get into a liquid situation.
Now, I found that very interesting because Google, 69-ish% of their revenue comes from search and from websites displaying their ads. And most websites are receiving traffic because of search. I think the New York Times says 50% of their traffic comes from search. So I've thought about, where is the revenue going to be in AI? And I want to ask you, because I'm not convinced that the revenue will be at Microsoft or Google. I think the beneficiary of AI could be businesses with a slight enhancement of productivity, or the user getting an answer on Google quicker, or a coder getting a little quicker. But where's the true revenue going to be? And is that potentially, are we on the same page that maybe if we don't know where the revenue is that why it's a flash in the pan, you think?
Well, let's think about that for a second. I mean, is AI itself, let's start with what is it? So let's make it very simple. AI is simply scraping the internet for information. So it's a way of organizing what's already searchable on the internet and putting it in a narrative. That's all it does.
Okay.
And you can train it to do lots of other things, and that's good, but it starts with that core amount of information that's already out there. It can't do anything without information, and it's constantly adding information. The idea that you stop doing it for 6 months to save mankind, I don't buy that.
That was nonsense. That was the Elon Musk letter.
I love it.
Yeah.
So to allow his deal to get some footing, I think that's very smart of him. The guy is, I love the guy because he's a master marketer, and now he has his own network called Twitter, which is brilliant. I think maybe overpaid for it, but that's a debate we'll see later. I think at the end of the day, though, it's just a feature set, and so for Google, one of the first corrections in their multiple was everybody saying, "Oh, this is the Google killer." Mm-hmm. Well, look at your own behavior. I pay the $20 a month for ChatGPT to be able to use it, and it's a tool, and I do use it, but I still use my search engines, and so because I can't get accreditation for the narrative that's generated by ChatGPT.
Citations in that.
So, well, I need that because I have no idea if it's bullshit or not. So, so I'd like, and I think that they're saying that they'll bring that in. Every time you criticize AI, they say, well, it's going to be in the next version. And that may be true. That may be true. But the point is, it's not ready for prime time yet because you can't go and publish stuff where you don't know the accreditation. You have no idea.
And that's why you call it a bubble.
Well, the valuations are bubble-icious. So, and there'll be lots of people. I mean, they raised money at a 29 billion valuation.
OpenAI.
Yeah. That, I mean, that's, with no revenue, essentially. That's tough to digest.
That's a good point. Speaking of tough to digest, on crypto, Mr. Chamath Palihapitiya, SPAC King, says that crypto is dead on his latest podcast because of the lack of clear regulation in the United States and the lack of a path towards regulation. It seems to me that, this is just my opinion, Congress should probably pass a rule, but they won't. Gensler at the SEC and the Commodities and Future Trading Commission, they can't do anything, so they are trying to get the judicial system to basically create case law, but that's going to take years. And that's leading some people like Chamath to say, crypto's dead. What say you?
Well, he's not entirely wrong. It's dead to institutional investors.
Oh, wow.
So I index, we do indexes. I speak to sovereign wealth and pension a lot, and they will not touch crypto until there's regulations. So for all the excitement, Bitcoin is locked in purgatory to set a trade 17 to 35,000 for a long, long time. Because it's basically the same people trading it back and forth. And there's no new money coming into it. It's not an institutional product where they get a 5% allocation. There's nowhere to hold it. If you're an institution, I thought one of the biggest mistakes of recent was Coinbase litigating the SEC. That sounds like a really bad idea. That does not advance the industry in any way. It makes institutional shareholders cringe that they would be shareholders in Coinbase and be litigating their regulator. Very bad political move. And if I were a shareholder of Coinbase, and I'm not, I would let my displeasure known to the board. This is the kind of thing you want to change management for.
Wow.
You want teams to go in and work it out and figure out under what way can we operate under the regulator so that we can attract institutional capital for the day when, maybe a series of 50 tokens and coins are regulated as they are in Canada, as they are in Dubai and Abu Dhabi and Singapore and Zurich. Those regulators say, well, these are the ones you're allowed to trade. These are the ones you're allowed to stake. We don't have any of that here. And so the only narrative continuing on the Hill that I'm supportive of and I'm aware of, all the bills around Bitcoin and NFTs are all stalled out, but not on digital payment systems. That's a bipartisan bill. Senator Lummis, I know Haggerty's people are looking at it. There's others supporting it so that we can get stable coins
Yeah.
to do transactions to replace the SWIFT system, the ACH system. Those are really archaic. And they're expensive, and they're slow, and they're not transparent. So, a stable coin like USDC, if it was regulated, would be more useful. Hopefully in the next couple of years we can get that, but I don't know that either. So,
do you think there's a risk, this is always the fear that comes up, that, well, if we move to a digital dollar, let's say, a CBDC, the government's going to control our money and take it all away from us, or watch every dime we spend? Is that an unfounded fear?
they already control all the money. They already audit you. It's called the IRS. They already track what you do. The know your client is how they know you're not a criminal and allow you to transfer capital between states and countries. I don't know where this paranoia came from, but yes, a digital dollar is bad if you're a criminal. It's just bad. It doesn't help you do your business. And it's hard to transfer it without, being tracked.
Right.
But it's backed by the currency that the world denominates commodities by, versus would you ever use a digital yuan where the government would know exactly where you are? Now, we have privacy laws here and we can litigate them.
Yeah.
This does not concern me as much as actually getting the regulation. And there's always going to be, the way I always answer this question is, you think about free speech, how controversial it is, and yet how dear it is to every voter in America, regardless of what side of the fence you're on. But in order to tolerate it, you also have to tolerate the 2.5% lunatic fringe that has a voice that's utterly insane all the time. And so you're going to have that lunatic fringe in crypto. You're going to have the purists who say, I don't want the government involved. That voice is getting quieter and smaller. And there's one other aspect I'd like you to consider that I've been thinking about lately. When I look at the environment today, with all the litigation and all the regulation and all of the lawsuits coming into crypto, my guess is most of these operators out there today that were the founders of this nascent industry have never operated in a compliant environment or borne the cost of compliance.
Sure.
And they will be pushed aside, and a new generation of founders will emerge that will work with regulators.
Yes.
So all of these rogue operators, the people that are stealing your money and all of this crap. And the reason I say this is when I went to the Senate hearings for the FTX hearings, I learned something the next day that I never even thought of. I was talking to the senators, and I won't mention their names, but it was a group of them said to me, look, here's a message for you. We're tired of this. We've reached the point of tedium was the word. We're tired of gathering every 6 months when the next idiot blows up and loses $6 billion.
Yeah.
So here's what's going to happen. Go tell your comrades this is going to happen. The heavy hand of the regulator is going to be coming down to squeeze heads starting very soon. And you won't find any sympathy here on the Hill anymore.
Which happened.
It happened faster than I thought. I marched home and told everybody in my shop, whoa, those guys are pissed. And they don't have any sympathy anymore. And the next thing you know, Binance gets whacked with a class action, and then regulation slamming FTX US, and they're chasing them all over the world. And, they're looking at that BNB token. That's the next thing to blow up. And so,
oh, really? You think that'll blow up?
I can't see how that survives.
Binance, you don't trust CZ?
No, it's not about trust. It's about this. Think about what happened in the last 12 months. I mean, just follow the dots.
Okay.
I mean, I think CZ is a brilliant guy. He's a great entrepreneur. What he's built is remarkable. I just think he's the largest unregulated central exchange in the world, and that's hard to become. Now, he has two choices. He's on the path and the road. Come to Washington, settle his grievances with all these charges that he's faced with. Let's just put a price tag on it. $8 billion.
Yeah. Okay.
And then get a license and be the giant behemoth licensed exchange, broker-dealer attached to an exchange with a license in the world. If it were me, I would take that path.
Yeah.
But that's not a very profitable path because the cost of compliance is very high because you don't get to put, like, think about these tokens. FTT did the same thing, FTX. You're an exchange. You say, oh, I'm unregulated. I just launched a token. It's called BNB. I say it's worth $64 billion. And the reason you're going to buy it from me is I'm going to give you trading discounts if you hold at least 20,000 in your account. That is so illegal in a regulated environment. You couldn't do that in a bank anywhere, not just the United States. And it's very profitable because two wallets own over 90% of 64 billion. Who owns them? Who owns them? Unknown. What happens if one of them wants to sell them? Does Binance have $30 billion in cash? No. And so who backs it? Unknown. Like, these are the questions that regulators want answers to. And that means CZ has to come to America, disclose ownership, disclose who backs it, disclose everything, know your client, and all of a sudden lose 80, 90% of his profitability. Or he could just work in the shadows, as he's doing now, and just say to the US, okay, I'm closing my operations down in the US. The only problem with that is a few months later, the regulator in Switzerland says, well, if the US is doing that, maybe we're going to do that too. And then Dubai and Abu Dhabi go, ooh, CZ.
That's where he is now, in Dubai.
Yeah,
right.
and they say, CZ, love you, baby, but, this thing with the SEC, the US regulators, we do a lot of business in the United States. In fact, most of our money's over there. Could you move to
Geneva or whatever?
Cuba?
Oh, interesting.
Or somewhere,
okay.
Just get out of here. And I think that's his destiny. This is my own speculation. But it's going to be one jurisdiction after another that says, rather work with the US than support this rogue operator.
Interesting.
And I think that's the downside of that's the end of the Binance story. Now look, I'm speculating, but would I have any money in Binance? Never.
Wow.
Never, because only in the last 6 months, look at the onslaught of litigation they face.
Right.
And so, and I've met with all those regulators in Abu Dhabi, in Dubai. They're not stupid.
And so now this was different previously. I mean, people operated in DeFi all the time, and that wasn't a bad idea. I mean, people were able to make money and trade or whatever in DeFi. Is it different now because of how the regulation has come down, do you think? Is that why you feel that way
The
now?
optimism of which you speak was at a time, even just 2 years ago.
Euphoria
around the idea that, somebody would finally get that regulated ticket in the US. And they would lead the standard passport for all other jurisdictions, as they do in stocks and bonds. If you look at the regulations in Abu Dhabi or in Zurich or in London or in Paris or in Singapore, they're remarkably similar to the SEC's regulations on exchanges. It's the blueprint for the world.
Wow.
And so the Canadians, the OSC, they're all the same. These regulators actually talk to each other every week. And they coordinate together. And so the euphoria was around, okay, they're going to do crypto now. They're going to integrate crypto into the financial services around the world.
Right.
That's not the case right now. And so in order for that to happen, we're going to have regulation. And so that's why the euphoria is gone. That's why people are saying crypto's dead. And it is effectively dead unless and I love the rah-rah cries. In fact, I've had great performance on Bitcoin. I bought some at 17,000 and change.
Nice.
It's gone up 68%. That's great. But it's a tiny portion of my portfolio now because I am not fighting regulators. There's no upside for me in doing that.
Yeah.
And I'm certainly not suing them. That's the stupidest idea I've ever heard.
Yikes.
And I've seen lots of stupid ideas, but that is the top of the cherry.
Now, they would probably say they've been trying to work with the regulators, but it's not working. Should they just stay patient? Are they getting impatient by suing?
The regulator has unlimited resources and the backing of the federal government. The whole idea is when you end up in call it a roadblock or an impasse, you don't put out a press release. You fly to Washington and you sit down in a room with no tape recorders and talk it out. Find out what they want.
Not Zoom call.
There's no Zoom call here. You find out what they want, what they would agree to, what maybe the path is. There's all kinds of lawyers that do this for a living to find the compromise.
Sure.
You don't tell them how you're going to run your business and that you know more than they do and that they're ignorant at the ways of financial services. That strategy is so dumb. It guarantees you an impasse in perpetuity.
Wow.
And I think that the companies that do that, we don't have to name them, are going to have to change their boards and managers before they ever get any traction.
Oh, wow. Yeah, because those reputations are done. In
Destroyed.
Other words, destroyed. Wow. Now, Elon Musk, I can't remember if it was the FCC or the FTC, Communication or Trade. He wanted to meet with the top dog at one of those agencies. Let's just say it was the FTC, the commissioner of it or whatever. However, she said, no thanks. Come into compliance with all of our rules first before I'm willing to sit down and talk to you. Are there politics in this? Should he accept that and sit down with maybe the other regulators and not necessarily the top
That,
ones?
if you understand how regulators work, that's the beginning of a negotiation. That is actually an invitation to come on side.
Oh.
And the question is, I would have, I'm not saying how Elon's a very successful guy and I absolutely love him, but my answer would have been, which regulation should I be compliant on first?
Oh.
And give me a priority order and get into that dialogue,
That rhythm.
of what it takes. And when they see you moving in that direction, the spigot opens for further dialogue. I've been regulated my whole life. And I understand the cadence of how regulators work. There's a law. They basically have an enforcement arm to enforce it, but they also want you to be successful. You're a part of the economy. Everybody thinks the regulator wants to put you out of business or the IRS wants to put you out of business. That's not true. They simply want you to comply with the laws they've been told to administer it. And so if you come in with that white flag, you get to the front of the line. You don't beat them up. If you don't understand that, you're an idiot. That's how it works.
Would you say that, just to use an analogy, Coinbase suing the SEC is much like throwing a rock at a cop?
Oh no, it's worse.
It's worse.
It's spitting on the cop, then throwing a rock at him, then when he's on the ground, spitting on him again and doing something worse. And they don't forget. They won't be forgetting.
So Cathie Wood should sell Coinbase.
I don't think that's been one of her really good investments.
Okay, we'll leave it at that. Hey, quick reminder to check out my wonderful programs on building your wealth linked down below. I regularly add content to them. I go live every single day with course members providing not only my commentary, financial analysis, real estate analysis, but I answer your questions. There are multiple different avenues you can check out. You could start with the Zero to Millionaire Real Estate and the Stocks and Psychology of Money group. Phenomenal baseline knowledge to really build your wealth. Check out the Elite Hustlers course to grow your income as an entrepreneur, making sure you're negotiating those higher wages as an employee or protecting yourself as a business owner. Make sure you check out the Real Estate Agent course if you're an agent, the YouTube course if you want to build your social media following. So all of those linked down below. I would love to see you as a course member. Soon, we'll also be doing free house visits to random course members within the course, whoever wants to, and we'll be exploring what your financial journey has looked like. Check it all out, link down below. I've had some tinfoil hat ideas about Binance and CZ that CZ never had an intention of buying FTX, which that failed, that purchase. Never had an intention of buying Voyager, the Canadian brokerage, which failed. Those purchases failed. I have a suspicion, and maybe it's just tinfoil hat, that perhaps he offered to buy those companies, knowing he would never, because he would never be compliant enough, it would never be approved or whatever, or they didn't have the money to do it, simply to prop up the price of Bitcoin, since about 80% of trading volume for Bitcoin is on Binance, and they just moved some of their BUSD over to Bitcoin, about, I think it was around $1 billion. Am I wrong to think that way?
No, I think CZ is the most brilliant strategist I've ever seen. He is the ultimate digital warrior. I saw what he did the week of November 6th. I was, part of that whole thing. I know exactly what happened. At least I think I do. And he was a brilliant chess player. He put his only competitor out of business in a matter of 48 hours. Yeah. Now, the cost of that is going to haunt him for a while, because there may be clawbacks to that $2.1 billion he stripped off the FTX balance sheet. And certainly the shareholders of FTX would like that. And it's going to be tied up in litigation for years. Oh, yeah. But the narrative on FTX has moved to recovery, because we've now got over $7 billion.
And what was the loss? It was about 8?
Yeah, so they've identified it.
Wow.
It's not going to help the shareholders of either FTX US or FTX International. But the account holders are...
The depositors.
The depositors are probably going to get something back after a long period. Now, was it 30 cents, 40 cents? I have no idea on the dollar. And there's a bunch of transactions occurring in the sub-markets around assets being bought back. The bankruptcy courts will view these things going forward. But in the case of the actual reason that it happened and there's a bunch of documentaries coming up. Bloomberg has one, which I think is going to be very fascinating, because they spent a lot of resources going around the world chronicling those 36 hours. Wow. And you're going to see a different view of this when they release that film. It's almost a feature. It's just fascinating. I participated in it. I was really intrigued by the depth of knowledge they had. Usually you meet these producers, they come running in and they have no idea, they've done no research. Not these guys.
Wow.
They were way ahead of the curve.
Is this the Bloomberg Intelligence Division? Or?
No, it's, Bloomberg's funded, maybe they're a British crew. British do a great job on documentaries. And I think they're going to release it, I don't know what distribution channel, but it's coming, because I've had some subsequent calls with them looking for more content. It was remarkably well researched. And so it's defining the change in the industry. And I think there'll be other, there's a book being written and everything else. But what happened, it's very simple. Between FTX and Binance, they were friends at the beginning. And yeah. Binance bought 20% of the equity from Sam. And the two of them were the it kids in building this industry. And they were remarkable. What they achieved was incredible. And then when, FTX was starting to spend more time trying to win that golden prize of a regulated exchange in the US.
They wanted to do stocks too.
Stocks too, and sat down and, Sam Bankman-Fried spent over 50% of his hours every week in Washington at the end there. So he was really, really pushing for this. And CZ was watching this saying, this guy's gonna beat me to a regulated exchange? And he was doing it in Switzerland, in London, in Abu Dhabi, in Dubai, in Singapore. So what CZ did is every time they'd submit their application, he owned 20% of the equity. He'd say, on the Know Your Client, you'd have to fill out the cap table. Who owns that 20%? And he'd say, I can't disclose ownership. Over and over again. In the beginning, it was a friendly conversation saying, gee, you got to disclose it. I can't get a license. But he never disclosed it. So the board or the management of FTX finally said, we got to buy him out. We got to go back. And now the value is $32 billion. So that price tag had gone from, a few $100,000 or whatever the seed stock was, I have no idea, to basically over $2 billion cash. That's how he wiped out all of the cash off the balance sheet of FTX. And then the last, credit was done with FTT tokens, 550 million. And CZ brilliantly jammed that down Sam Bankman-Fried's throat on the morning of November 7th. And put them out of business. And all the rest of the stuff happened, but that's sort of what occurred. And that will come to light through these documentaries and everything else. So he has that to deal with when he goes to the bankruptcy courts in the US, but he doesn't have to. He never has to come to the US.
CZ doesn't, right.
So he can stay in the shadows. I just think it gets harder and harder as other regulators say, look.
Squeeze him over.
Yeah, that's it. And he's very profitable now. You won't be that profitable when you're regulated. You'll be the same returns as a bank at the end of the day.
Yeah. Or like a Robinhood, which is negative.
Forever it's been negative.
Yeah. Now, one of the last times we had an interview, 1 or 2 times ago, I mentioned to you that I wore 2 Apple Watches, and you talked to me about how much you hated the Apple Watches.
Well, I'm wearing one today.
I see that.
And because the biometric technology on this version 8 is so advanced. And so I don't wear this for telling the time. I wear a real watch for telling the time. But I use this for all my biometrics, and I track the data, and I'm very into sleep and oxygen levels and how many steps I walk and my workout routines and calories consumed.
So it's not garbage.
No, I will hand it to Apple that these firmware updates, even on the 7, but the 8 is incredible. The only reason I didn't buy the Monster one with 3 days, it's just too ugly. But this there comes a point where even I have to say, wait a minute, I got to draw the line.
Soon it'll be this.
Yeah, but I certainly support horology. I'm wearing an FP Journe today, one of only 10 in the world. This is the New York version. This is number 6. So when I'm in New York, I wear the piece. It's in celebrating what Journe's done here in New York City, and I love it. And I just took a tour of the Tiffany store last night before it opens tomorrow. My goodness, oh my goodness. It's got the most incredible Patek Philippe boutique in it you've ever seen, and 10 floors of just extreme art.
Is that on the 5th?
It's right beside the Trump Tower.
Yeah, on 5th, okay.
But it is beyond a retail, it's a new form of statement about, I'm going to hand it to LVMH.
Oh, yeah.
They've changed the retail experience. I felt like I'd walked into the world's most beautiful retail store and a museum and the Louvre at the same time.
Oh, wow.
And
that's a big
every
statement.
floor was spectacular.
I believe now Arnaud, the CEO of the family from LVMH, I believe his net worth is about to rival Elon Musk's. It may have passed.
Well, I would say he deserves it because that family understands brand.
I like that.
When you look at what they've created in the value of just Tiffany,
Yeah.
and the relationship they have with Patek Philippe and the brand, when you walk in that store, they made 100 pieces of a watch, not an expensive watch, but a beautifully designed piece to commemorate the opening of the store on 5th. Now, as a collector, I have to have that watch. So
Wow.
I'm very fortunate to have one. And I bought it because I want to keep that in my collection for its dial. It's a Tiffany stamp dial, but it's simple, it's beautiful, and it's a part of history.
Wow.
That store is going to become legendary. The theme is Breakfast at Tiffany on one of the floors with Audrey Hepburn. They must have paid a fortune for her likeness because the dress and the actual pearls that she wore. Every woman on that taking the preview with me just stopped and went, "Oh my goodness!"
Wow.
It's breathtaking. I mean, I can't say enough good stuff about it. And I would have been a critic if I thought it was poorly done, but it was spectacular.
That is remarkable. I want to know your thought on a little bit of a shift of topic here, but you actually mentioned it's right next door, Trump Tower, the Trump indictment, and Trump versus Biden 24, or DeSantis. What say you?
Yeah. It looks now, if you looked at the polls, it's going to be a remake, a rematch, if you would, of Trump versus Biden. I think a large portion of the voting constituency out there doesn't want that. They're exhausted.
Yeah.
So maybe what happens with this election, if that does happen, if that is the outcome, that this will be an election about policy. It won't be about personality. You already know both players.
Yeah.
There's nothing more you need to know.
We had a free trial of both, 4
Right,
years.
for 4 years on both. So you know the participants. So I think this happens every few cycles. Voters will drill down to policy. They'll make the assumption that Trump will bring in a certain type of manager, and Biden, what he wants to do, and they'll make a decision on what the policy for the next 4 years should be in America. And I just hope it's pro-business, that's all. And so whichever party can define a path to prosperity, not, whether the election was rigged, or I don't care about that stuff. Show me the path for prosperity, because that's what I do. I support entrepreneurs. And so that's what I'm looking for in the narrative on the election.
So then what say you about, we've got maybe 10 or so minutes
I want to
left.
make sure we touch on ERC.
Oh, yes, absolutely. What say you about DeSantis, Disney?
Yeah, I'm teaching that case right now in my in my colleges that I guest lecture at about the peril of a CEO that runs a business, and I'm using Disney as the case, the previous CEO who just got fired.
Iger's in now.
Yeah.
Chapek.
Chapek. Chapek lost his job by making one big mistake. You should always stay focused on the business, and that is defined by your customers, your employees, your shareholders. They certainly, you serve them as the CEO, and of course your board. And where he lost his path or got lost on the path was, let's get involved in social agenda.
Ooh, yeah.
And if you think about the people that go to a theme park or watch Disney programming, there are many Republicans, there are many Democrats, there are many independents, there are many families. They all have different beliefs, but they know that Mickey and Minnie don't vote.
Yeah.
They've always been there to celebrate the joy of childhood and entertain. And somehow he forgot that. That was a big mistake. And then he picked on a politician named DeSantis, who took him on and erased billions of dollars of market cap for Disney. And then he realized, uh-oh.
Oops.
Then he got a phone call on a Saturday, and they said, I'm sorry, you're lost. You're not running Disney, you're doing something else. And thank you for your service. Take the pictures out of your office. Please leave.
Wow.
And that's exactly what happened. It's brutal. And now Iger owns this, and it's a very, very challenging situation. Now, it's also had a cost to DeSantis because Republicans also like Disneyland.
Yeah.
They like to take their children there. They don't want to see it shut down.
Right.
And it's made him flounder a little bit on his presidential bid. You look at the poll numbers during this war of words and now war of litigation with Disney, that's not helping him. And I think, again, this should be a case, and Iger put out the first olive branch, and then he got it.
Yes.
Saying, let's sit down and talk.
He did, yeah.
And I think those two really should.
Yeah, I agree.
Disney is a founding shareholder of Northern Florida. And that's the way to look at it.
Yeah, absolutely. So, it can be touchy, but there are some arguments that, things are getting a little extreme now with DeSantis suggesting maybe let's build a prison by Disney, and then Disney's now doing a Mickey Mouse Pride show. Can all of this be solved by sitting down and discussing that olive branch?
Yeah, everybody has to get back in their lane.
Yeah.
Building a prison beside Disney is not a good idea. Yeah. It's not good for Florida.
No.
It hurts
the economy.
It hurts tourism, which is a multi-billion-dollar business because of Disneyland.
I think there's 7 to 10% of the entire economy.
Yeah, and I think everybody understands it's a war of words. And then for Iger, it's sort of, he's getting advice from everybody, but he was is a very successful CEO by focusing on what Disney really is. I remember something that really struck me. I was watching the Beatles documentary called Get Back, and at the very end it says, thanks to Bob Iger. He greenlit that project with Jackson, and to take and restore all that film that cost millions of dollars, because he understood how entertaining that would be to a whole generation of people that grew up with the Beatles and in fact are rediscovering the Beatles. That's a good CEO, because that's good for everybody. Everybody involved is a winner on that. It doesn't matter what your politics are. Getting involved in social and moral and gender issues, what does that have to do with Disney? I would argue, as a shareholder, why are you taking me down that path? Mm-hmm. Aren't you always going to upset 50% of your constituency, no matter what side you take? And why would you do that as a consumer goods and services company? Help me understand the game plan.
What's the benefit? Yeah.
What's the benefit? And I don't think there is an answer for that. And I think that's where this will end up, in a place where core values of what DeSantis is as a leader versus core value as what Iger is as a CEO have to get back. They both have to get back in their lanes.
Speaking of upsetting 50-50, Don Lemon, Tucker Carlson, was this coordinated? Did they get a call from the Biden administration that both of you got to clean up a little bit here? Or what happened? Because it happened the same day. It's so odd.
That was just coincidence.
You think so?
Yeah, well, the agents feel that way. Everybody involved in television has talked about this.
Okay.
I like Don Lemon. I worked with him for many, many years. I think Tucker Carlson was one of the best interviewers. You may not like his politics, and I understand. But, you know, I go back to some words that Mark Burnett told me. It might be 20 years ago now.
Producer.
Yeah, the producer, Mark Burnett, who does
Did he do
Shark
Apprentice?
Tank. Sorry?
Is he Apprentice?
He's everything.
He's everything.
Yeah, he's everything that's successful in reality TV all around the world. And he's a really interesting guy because I remember when I met him and he was interviewing me for Shark Tank, and he said, "Look, we're looking for a real asshole, and you're it. And I think don't go changing." But what he said to me was, when you think of the context of what television is, it's a form of orchestrated chaos. Great television is unpredictable, orchestrated chaos. That's what it is. And there are certain rules on how it works. And he said to me, it's impossible to get on television, and it's impossible to stay on television. It really is.
Really?
And so when you look at the success of Shark Tank, we're taping our 15th season.
Yeah. Congratulations.
Yeah, thank you. And I'm very proud of what we built together. But I understand how it works. I understand the role of the showrunner. I understand my role as the investor. I understand my lane. I stay in it. I understand the head executive of a network. And I always, when I get invited to go participate in these various networks, and I've done them all, I always ask, can I meet the CEO? I only need 15 minutes.
Nice.
I just want to understand their vision of what they want to do every day. And I want to be part of that DNA.
That's what you ask.
I always ask that. And I learned that decades ago. And I think they appreciate that. I mean, television is something I really enjoy, but it's not my real job. I mean, I'm an investor. But in order to have the platform I have and I enjoy all around the world, I got to play by the rules.
Oh, yeah.
And so if you ask why, and it will come out eventually, what happened to those participants, they forgot that you're part of the organization, you're a piece of it, but you are not the organization.
Yeah.
No matter how successful you are, no matter how many people watch your show, everybody's replaceable.
Wow. There's a lot of talk of cancel Fox after getting rid of Tucker Carlson. Some folks make the argument on the flip side that, well, he shouldn't have gone on certain podcasts, and argued that, there's this puppet master in the back orchestrating everything, and people are being misled, apparently, is what he said on a podcast. Do you think he sort of dug his own grave thinking he was getting too big, as you just alluded to? Big head?
The best, I meet a lot of people that are just starting their careers in television, and they ask me, just give me one piece of advice.
Yeah.
And I say, this is all you need to know to be successful. Read the room.
Ha!
When you're in the room, read it. And so I bet you I've done 1 million hours of interviews on television in 20 years. I don't know how many, who knows? But I'm always aware of where I am and what I'm saying. And you have to be totally transparent. If you believe it and it's true, and you believe it's true, you can say it. Yeah. But what facts make it true? Why would you blurt something out that you haven't researched, maybe? Or something that, and if you don't read the room, what happens is the room reads you and
Interesting.
your history.
Now, this is an interesting one. I had after the governor election and the recall, I had a TV anchor invite me to coffee. They wanted to learn about YouTube, and in exchange, they wanted to give me a little bit insight into the media world of California.
Yeah.
And they mentioned that sometimes they will be forced to read something that they don't believe is true. And I don't know if it was just that network or what, but they mentioned there were times they'd read something because, for example, my campaign, CNN mentioned there are no other Democratic candidates running against Governor Newsom. And I ran as a 51-49er in the middle. We had to send him a cease and desist letter on that, and then they revised what they said. But it was fascinating because that person, I don't know if it's true or not, told me that sometimes they might be in a situation where they'd get fired if they didn't lie. Could Tucker have been in that situation? Because on the flip side, he says he had editorial freedom, but which is it? Was that true, or is it
No,
not
but
true?
remember that all of these issues are not around reading copy. All of these issues are around having an opinion about the copy. And so they've created their own narratives, and that was very popular. People would tune in to hear the narratives and what their opinions were. This was not, if you go back to the history of journalism, or CBS News, Walter Cronkite, the most trusted man in America in the 60s, he read the news. He didn't render an opinion on it. He trusted the editorial staff to fact check it.
Sure.
And when there was an error, he read that news too.
Yeah. Sure.
And his famous comment was, and that's the way it is. Because I used to watch that sitting beside my parent as a toddler. And I always remember him saying that. And he believed that because he trusted the editorial staff. That's not how news is read today. Most of the people that report the news have an opinion about the news. And that takes you into a new area of risk. And so that is where you have to read the room. And if you don't have the political sense to do that, don't try, because it will end badly. And so this is why all this cancel culture is occurring. When you go and say something that is offensive to enough people, where it shows up in a measurable form is in advertising. And what drives networks? They're private companies or they're public. Advertising.
Revenue.
You can't offend everybody
Yeah.
because then you'll have no advertisers.
Interesting.
And so that's sort of the way this is correcting right now. We will see more of this in the weeks ahead. There's this dinner that's going to happen in Washington on Saturday, where all of us involved in television go. It's going to be the craziest one ever.
Wow. Okay, we'll have to stay tuned for that. So read the room. I think that's great advice. There were a couple final little notes I think that you wanted to touch on.
We got to do ERC.
Yeah, that's actually one of them.
Okay.
ERC, and I think you mentioned New York City. Something you wanted to ask about that or mention about that? Those are the final two things.
Yeah, let's do ERC. So
okay.
Let's
Employee retention credit.
Yeah, so let me tell you about employee retention credits, because everybody knows about PPP loans, and this is primarily for small business. I spend so much of my day investing in small businesses, supporting entrepreneurs in America. There's been a sea change to their cost of capital.
Oh yeah.
And it's happened in a matter of about 90 days. So I'll give you some measures that can really, so when we have a company doing 50, maybe 100 million in sales, and we're selling a consumer good or service, we're distributing through Walmart or Target or whatever. When we get an order from a Walmart, that's a credit good. And so if we need cash, we'll go to the factoring market and say, look, we have a $500,000 order. We've already shipped it. It's a receivable from Walmart. We'd like to sell it to a factor. And that cost used to be sort of 7-8%. You'd negotiate it, and we get our cash, and we need it.
Sure.
And if our margins were 28-30%, okay, we gave up a third of our margins. Yeah. Okay, but that's better than not having the cash.
Right.
In a matter of 90 days, the factoring market has gone from 7 to 8% to 12 to 27%.
Oh wow, double or triple.
Double or triple. And so all of a sudden, cash is king, and we don't have any access to it. We can't get loans anymore. Regional banks have shut down because they have new liquidity requirements. or they're trying to figure out what's going on. So I'm talking to my CEOs about this, and we remember the days of PPP because we all took it if it was applicable to us.
Yeah.
Then I learned about a program, and I didn't believe it when I first heard about it. Someone said to me, well, have you applied for your employee retention credit for your companies? I said, what is that? Here's the story. At the same time that PPP was launched in 2020, the government also, Treasury funded the IRS with something called the Employee Retention Credit. Yeah. And it was designed to support employees during the pandemic that were on W-2s, so you didn't fire them.
Right.
They basically helped you pay their salaries during a period that the government forced you to shut your business. Yeah. Made sense, but it wasn't something that you could do both. You couldn't do PPP and the ERC. You had to choose. It was very easy to simply call the bank, say, I want to take the PPP loan.
Of course.
And your bank manager just applied for it and got it for you and stuck it in your account. Yeah. And once you got that, you couldn't do ERC. Then the pandemic got worse and worse and worse. And all of a sudden, in a simple change of a pen stroke, the government said, okay, we got to keep people employed. Let's allow you to do both. So in early 2021, you could also apply for the Employee Retention Credit, even if you'd taken the PPP. Nobody knew.
Wow.
And so the program's going to end in about 23 months. So when I heard about this, I said, well, what's this ERC? And they sent me the program. It's 170 pages. It's the most complicated thing you've ever seen.
Put it in ChatGPT.
No, and you can't even, even accountants are having a hard time with it. So there's specialists that know how to apply for it. They charge about 20%, but they don't have enough capacity because I have a lot of companies.
Yeah.
So I set up something called the wondertrust.com.
The Wonder Trust.
Well, it's just wondertrust.com.
Wondertrust.com.
Yeah. Okay. So you go to wondertrust.com, you can do it on your cell phone, and basically what you do there is you book an appointment with an expert. You spend 3 minutes on the phone with them, and they determine if you are eligible. If you are, they set up a portal for you. You upload all your documents, which are your tax documents, your W-2 information, and they apply for you into the program. 5 months later, you get a check. Now, how much are these checks? Up to $26,000 per employee.
Wow.
So if you have 50, 60 employees, you can get $500,000. So when first of all, I didn't believe it. So I started making calls. I called up governors and senators. They hadn't heard of it either. And so nobody knows about this program. It's already been funded. The money's already there. It's like that you left your car in a parking lot during the pandemic, and now they're asking you to go pick it up. This money's there for you if you had W-2 employees.
Wow.
So I urge...
During the pandemic?
Yes, during the... Yeah, and so you have to have had them on W-2 in 2020 and 2021. So now I can track your check. I know when it gets released. I know the day it's mailed to you. You don't pay the fee for it, whatever it is, until you get your cash. And I'm doing this for thousands of companies now. And my goal is to do it for hundreds of thousands of companies, but we're running out of time. I urge everybody to go to wondertrust.com, check it out. I've become the paid spokesperson for the entire program. I found the largest operator that's a pure play that has all these people. I've got 60 people just on the phone taking inbound calls. You can't do it online the way you want to. You've got to talk to an expert first. That's the story. And so I'm running around everywhere, on every outlet I can talk about it, and you get on top of the mountain saying, get your employee retention credits. Because it's not a loan. You get this check and it's yours for your business.
Wow.
You don't have to pay it back.
No repay. That's phenomenal. Oh, and that was wondertrust.com.
Yeah. I think it's a great name. Plays off Mr. Wonderful.
There it is.
Yeah.
Anything else that you'd like to add?
No, that's it. As always, I've enjoyed this much more. This is our 5th time, right? Yeah. This is much more fun in person. What a beautiful backdrop, New York City. Great to visit this place. Do not move here. The taxes are insane. Good to visit.
Thank you so much, Kevin. And make sure to follow Kevin O'Leary on all your socials. Kevin O'Leary, you're on YouTube. I know you're on Twitter.
Yeah, it's Kevin O'Leary TV on Instagram, on Twitter. You'll find me on YouTube, LinkedIn. LinkedIn, my goodness, that's become a massive platform. Yeah. Very interesting. A lot of debates on LinkedIn I really enjoy. Some really lengthy discussion about policy, which is great.
Twitter or LinkedIn?
I use them both.
Okay.
And TikTok now, I've got over 1 million followers.
Oh, wow.
Who knew that would come?
Good for you.
Yeah, I'm like a
Congratulations.
TikTok dancing guy.
Oh, wow. Okay, well, there you have it. You want to see Kevin O'Leary dancing?
Exactly.
TikTok. Thank you so very much. This was a blast. Thank you, everybody, for watching. If you found this helpful, consider sharing the video, subscribing. Hey, drop a like, leave a comment. What did you like? What did you not like? What comments do you have? And, folks, we'll see you in the next one.
Do you have any thoughts on Taylor Swift as an artist or her music or as a businesswoman?
Yeah, you know, I saw Taylor Swift's comments about crypto. I thought that was fascinating. But, you know.
I think that was fake, by the way.
It was what?
I don't think that's real.
That has nothing to do with the case. What she talked about is debating whether crypto is a security or commodity has nothing to do with that. Debate's being done all around the world.
Yeah.
So I don't know. I don't know why that has anything to do with her participating in.
You know why? Because the attorneys who are doing these lawsuits or whatever, they mentioned that Taylor Swift was debating that in whether or not she would take a $100 million partnership, I think, with FTX. I don't believe they know anything about Taylor Swift. I think that is the perfect thing for them to say, to speculate on, to advertise their law firm.
We're all speculating.
Yeah, we are speculating.
But my speculation about Taylor Swift is the only reason she didn't get 100 million in FTX is they blew up first. That's all.
Okay.
That's it. That's the answer.
That was awesome. That was a great ending. Good job, man, Christian. That was great.